digital world is changing fast. Either you're part of that change or we all get left behind. At ING, you make progress possible. When you step up and do your thing, you create opportunities and growth, not just for the business, but you also help make the world a little better too. How? Through the ING difference. The 3 ways you make a real difference to ING's clients and business. You know that together we build success, local and global, across 40 countries, working closely with our clients, even when we're on different continents, bringing the right people to the table at the right moment. It's what makes progress possible. You're part of the team of sector experts that sets us apart. It's our human touch, consistency, and deep sector knowledge that keeps clients out front through the highs and lows of the economic cycle, and keeps them coming back. You're one of the front runners who push towards a sustainable future, bringing much needed change to places and projects, because we all know that progress isn't negotiable. Progress is always possible. When all this comes together, you'll naturally work with clients who share our vision, creating growth, change, and a sustainable future for ourselves, our clients, and the world. It's our difference that makes progress possible. ING Wholesale Banking.
Bună ziua tuturor, bună seara de fapt, sunt Cristian Huciuc, directorul editorial al Ziarului Financiar și voi fi gazda acestei conferințe CEO Strategy During Difficult Times, cum reacționează conducătorii de companii, voi, în perioadele dificile. Organizăm această conferință împreună cu ING și cu un invitat special, Uday Saren, care este Head of Wholesale Banking Europe, Middle East, Africa, la ING Group. El a venit câteva zile în București, am profitat de prezența lui pentru a vedea încotro se duce lumea. Fiecare se întreabă în acest moment încotro ne ducem noi ca țară, voi ca business, încotro se duce Europa, încotro se duce Germania, care dintr-o dată a devenit din motorul economic al Europei bolnavul Europei, încotro se duce Statele Unite și în ultimul rând încotro se duc toate aceste tensiuni geopolitice cu războiul de lângă noi. Încercăm cu ajutorul lui Uday, încercăm să avem o privire globală a ceea ce se întâmplă în afara noastră, pentru că ceea ce se întâmplă acolo într-un fel sau altul este doar o chestiune de timp până va ajunge și la noi. Și mi-amintesc puțin de o informație de acum 2 zile, cu toții vorbim și tuturor vă plac mașinile electrice, nu? Cine are mașină electrică? Ok, peste un an veți fi și mai mulți. Și pentru că este acest trend global de a trece de la mașinile pe benzină sau pe motorină către mașinile electrice, un jucător de pe piața locală din cadrul componentelor auto, Yazaki, acum 2 săptămâni a anunțat că din toate fabricile din România are vreo 7, închide 2 fabrici. Pentru că a pierdut un client care își reduce partea de mașini pe benzină pentru mașinile electrice. Repet, într-un fel sau altul, toate aceste trenduri globale ne vor impacta. Vom încerca să vedem astăzi, cu ajutorul lui Uday și cu ajutorul celor care vor fi invitați la această discuție, sunt invitați la această discuție, încercăm să avem o privire puțin mai globală, europeană, legat de ceea ce ni se întâmplă. Discuția va fi în limba engleză, pentru că Uday încă nu a avut șansa să vorbească, să învețe româna, dar știți cum se spune. Când era o perioadă de examen, în 24 de ore poți să înveți așa ceva, nu că așa sunt toate machetele de marketing. Vrei să înveți limba engleză într-o lună? Aici. Bun, eu mulțumesc grupului ING pentru această oportunitate de a organiza această conferință, de a le avea pe Uday aici și aș dori să-l invit împreună cu aici pe scenă pentru, să zicem, pentru a avea un punct de deschidere a acestei discuții alături de Florin Ilie, vicepreședintele pe corpore ING. Haideți să-l aplaudăm, Uday, Florin. Uday, thank you very much for your presence here. Florin, the same. Please, sit down. How is your life?
Life is good.
Yeah, stay down.
No, thank you.
The life is good, yeah?
Yeah, life is good. I mean, inflation is coming down, growth is going down. What can go wrong, right? But it was an interesting. You asked a question of how many folks in the room own an electric vehicle. So I saw two hands, but the fact is
More than two hands.
Two hands. But the fact is that 46% of Romanians actually, in the last Deloitte survey, said that they would move towards preferring to buying an EV vehicle, and we're seeing across Europe. I mean, that number of just consumers moving towards EV is now, or at least expressing a preference to getting towards EV is now touching to almost 1 in 2. So it's
but in this trend there will be winners and losers.
Well, we have this year across ING, we are working with close to 1,700 of our corporate clients, and really helping and working towards a transition pathway of business models. So I would say that there is a transition on. For example, even in Romania, there are over 500 industries which are linked to from automotive and industrial combustion. Having said that, I mean, if I see one of the biggest in from a continental perspective, right, the German company. So even the EV cars still would need tires and seat belts and airbags, and we're seeing significant investment in research. But surely, as the consumer demand transitions, we will see a transition of the business model, and that is something which is already in motion over the last, I would say, already 2 to 3 years. So yeah, from that perspective, where there's significant investment in research, but the business model would change. One of the key, I think, strengths of the automotive industry in Romania has been labor, and that's significantly, for example, the average labor cost.
Labor and knowledge.
And of
because
course knowledge.
We produce in the communist era some brands here.
No, of course, but there is a significant competitive advantage, and that would continue. I mean, the average salary, the production in labor is almost like 1/5 of, say, a Western European counterpart country, and that is a significant advantage. Yeah.
Okay. Before I go to Florin, Dai, he's a banker since you were born.
No, yeah, but I've been a banker for 29 years now.
29, a lot of time.
Yeah.
What is your dream job?
My dream job?
Yeah.
My dream job is to open a beach shack in Goa.
Okay.
No, but yeah, I think banking is
it's a boring.
Bankers are boring people, in generally. But life used to be, it used to be. I think it has changed from what was what you call 363 banking. Have you heard of that?
No.
So you basically you borrow at 3% and you lend at 6%, and you hit the golf course by 3 o'clock. So I think that has changed, right? I think it's no longer 363 banking, but significantly just making a difference from our clients' perspective. I think when we look at what is the difference that we make with our clients, it is helping from delivering a sector expertise or the industry knowledge with our clients, leveraging our network, and finally, I think a key pillar for us is we believe we can really facilitate from a sustainability perspective. And you mentioned about EV, and I think that's something how we truly make a difference. So from a clients and from our business perspective on banking. Yeah.
Florin, a short message and a commentary of why we organize this conference.
Why we organize this conference?
Yeah.
It's called operational leverage. When you've got something, and everybody in the room knows this, you have fixed costs and you have variable costs. And once you cover your variable costs, then you are starting to cover your fixed costs. So having said this, this is variable sitting next to me. So you have a variable.
And you have fixed
variable knowledge. You have variable knowledge, not cost. Variable knowledge, and you should leverage the fixed cost and benefit from the variable revenue. Once we have this knowledge sitting next to us here today, i.e. the view on what's happening in Europe, and we are a function of Europe, and not only, Uday here sees also Americas and Asia as well, and in the management team there. So once you have dozens of countries that you can feel and touch in terms of what's happening, you basically have the lead indicator for Romania, because we are lagging, if you like, the demand or what's happening in developed markets for whom we are the preferred near abroad partner. This is basically what we are, right? This is the source of capital, and this is the source of demand for our exports, and not least the source of funds for our roads right now. So having a bit of a, I should put it, preview of what's happening and where this is going, I think it's worthwhile the time. And this is why we are trying to take advantage of this opportunity. This is why we are here tonight. Otherwise, we talk a lot among ourselves.
Also, I think it's an opportunity, to just share how we see, purely both in terms of some of the banking dynamics in terms of growth across the globe, not just in Romania, across Europe, and especially in Europe and the US, and global trends on growth, on rates, on inflation, and having some sort of outlook. I think that's another opportunity, to really share with the clients.
When the crisis will come?
When the crisis will come?
Yeah.
Yeah. Well, you put me on the spot there, but the thing about, and we were talking about it. Economists have predicted 6 of the last 2 recessions. So so it's so for every economist there is a equal and opposite economist. So when you ask me when the crisis will come, well, what we can talk about, the fact is that if we see, and I'll probably have a couple of slides on that.
Yeah,
if you don't,
we'll put the slides.
Yeah, if you don't mind, there is a slide on that where if you see the just from an interest rates perspective, we seem to be getting into what is probably the peak of the cycle, and the forecast. Is there a clicker I can control? Yeah, maybe, since it's related to the question.
You can stay there.
Yeah. Yeah. Oops. I think I have to go slow. Maybe I should stand. Should I point there or point here? Point there, huh? No.
It's not working?
It is working, but okay. No worries. No,
Can you put the slides, please?
No, that's fine. So I think the point I was making is that as we...
First topic, inflation. All the people wants to know when the inflation will come down, and what's happened with the interest rates.
Okay.
There are very hope in the market that the interest rate will come down fast as inflation will come down.
Yeah. So let me address that. Since the slides are not working, you'll have to bear with me. It's all there in the slides. But I think the first one really is, let's talk about just the inflation part of it. Clearly we're seeing inflation starting to decline, and but the decline is much faster in the US than in the Eurozone. So just the the curve is going down faster. And one of the reasons for that is that if you see the main components of inflation between energy and food and services, clearly it's the energy component which is driving the decline. I mean, the first kind of point I wanted to make was that 2023 has not been as bad from a macro perspective as we'd all seen some of the consensus. We saw, of course, growth rates come down, but then they've started to kind of pick up again. So you see this inflation slide, and the left-hand side is the U.S., where the rates it's starting to come down, and the orange component is the energy component, right? And whereas in Europe, we're still, if you see a pan Eurozone, kind of inflation, it's still at about 6% because it is energy, but the services inflation is still sticky. So clearly, a more pronounced decline in the U.S. Compared to Eurozone, and what this means from a rates perspective. If you probably go to the next slide, you just try and see if we can go to the next. Okay, I can do it. Okay, let's try again. Point here or point there? Point there. Okay. No.
Next.
Yeah. I hope it doesn't move now. Okay. And we see, the question on what's happening on rates. So across the board, I think it's fair to say, and this is of course a global view, the central bank rates are probably at peak or close to peak. And we saw UK kind of hold. And if you see a forecast going forward, one view which is emerging is that just the fall is not going to be as uniform as the increase. So while inflation rates start to come down, rates will start to decline. We believe our house view currently is, but notwithstanding the economist view, is from spring we start to see decline from the US, and of course the frequency of moves in the US is much shorter than from the Eurozone perspective. So we see rates coming off faster in the US compared to the Eurozone. But it is that stage where they will start to decline, but moving to pre-COVID levels is unlikely. At least taking a view over the next couple of years.
So your assumption is that the minus interest rates, as was in pre-COVID, will be over.
Well, I mean,
in our time, we'll never see minus interest rates.
Christian, I don't know what our time is, right? But these are cycles, and if you get projections, these are up to for the next couple of years. But clearly, the rate of fall is much slower in Europe versus the US, and unlikely to be. I mean, we saw some of the inflation hardening even in some Western economies in the last data numbers that came up. But yes, it's for sure that we are at the peak now, or just getting to the peak, and inflation starts to kind of decline. But of course, one impact of this is as we see. Typically, when we get off the curve, off the peak, that starts to impact growth dynamics, and we're seeing if you go to the first slide. Let me try and go back to the first slide, which is I mean, I mentioned the fact that 2023 wasn't as bad, and you see this classic U curve in terms of growth dynamics. But the estimate, look at the estimate for GDP growth in the US for next year. Consensus is 0.6%. We are a bit more conservative, 0.2%, which is almost flat. and for the Eurozone also sub 1%.
So you don't expect that the United States will go in recession?
Well, I mean, if technically, 0.2 is still positive, and the consensus is 0.6, but as is seen typically after the cycle where we have peak rates, we start to see slower consumer demand. We're seeing that in some of the larger economies. Germany has had, I think now, 3 straight quarters of contraction. So that's clearly slowing down, and it is quite possible that it may be the single largest economy to actually have contraction for 2023. And that's
This is bad for Romania. It's already bad for Romania.
Well, I mean, if you, just the previous slide. Okay. Can I control it? I mean, just the one showing Germany contribution across the CEE.
I know the slides.
Yeah, it's just, I mean, the data points are really to show that there is a significant contribution. So if you would almost say that if Germany kind of sneezes, then Central and Eastern Europe catches a cold, and that's the and we see some of that macro which can't be that positive for the economy. But then we've seen this movie before. If you go back 25 years, when there was unemployment in Germany was at 10%. Growth, but then clearly the economy pulled back, and this is the slide I was talking about. With this deterioration in sentiment and economic activity, it is surely likely to weigh in on Romanian activity, and you can see just the activity going down. The business sentiment, it's a rather kind of conservative view, but the business sentiment we see across the Eurozone immediately post the inflation is, if you look at the Purchasing Managers Index and PMI, it is at almost at what is like a recession level. So the forecast and the consensus view across the business sentiment seems to be at recession levels, and you see that we're barely above. And this is classic post the peak on cycles, post the peak on interest rates, which have gone up. But that's where we are. Okay.
Okay. You have a slide, the situation in Central and Eastern Europe. It's a very interesting how these countries depend on the Germany.
Let me try and. Just the one on the previous one. Yeah. So I think it's quite a busy slide. I don't know if you can see it. There's lots of numbers in it, but it really has one snapshot of Central Eastern Europe key metrics across the region, and you can see that just just look at the last row, which is the main export partners, right? And for Czech Republic, for Hungary, for Poland, for Romania, and for Slovakia, the number one trading partner obviously is Germany. And that's the point I was making, that as we see some of the slowing down potentially, that has an impact. Share of GDP of exports is from a Romania perspective is 42%, but some of these dynamics, the first forecast, the first estimates of GDP across 22, 23, and 24 forecast, if you see just the top right number, and that's the point I was making, Germany is barely on positive territory. I mean, this one still says 0.1, between 0.1 and 0.2. So yeah, that's...
We talk about
that's
Germany because we depend on the Germany. If the Germany is down, the industry in Romania is down.
Well,
It's mathematics.
It is a function of the fact that we have Germany as the number one kind of trading partner, and within Germany there are, I think, multiple factors which are kind of driving driving this. We've had 3 straight quarters. There is, I think, if you look at last year, Germany's trade with China was almost over 300 billion euros, and that the opening up of China also post-COVID has not exactly translated to the equation in a positive manner. So that's slowing down. Just the competitive nature of some automotive in Germany. There is a lot of local competition, and that is also slowing down a bit from that perspective. But yeah, that's the way it looks right now.
Yeah, from your point of view, from point of ING, why is Romania it's so good? If you look at these figures, we have some economic growth. Next year, your projection is over 3%. Why? From your point of view?
Well, I mean, if you see growth across Eurozone, we're seeing, I mean, it is a diverse market that we have both across Western and Eastern Europe, and these are the numbers in terms of what are the components of what's driving that growth, and yeah, we see not just Romania and Poland and Hungary at 3%. So the whole CE block is upward of 2 to 3% in terms of, and I think that's quite a positive outlook as it starts to come out. It is definitely growing faster than the rest of the Eurozone. It's also growing faster than the US. And what we've seen is what tends to happen is it really lags. The CE numbers tend to lag the Eurozone numbers, right? So for now, it's definitely growing at a faster clip across the board, and we've seen that even in our business, where of course as rates move up, we've seen higher flow of deposits. We've seen higher flow of margins, and and that contributes to a higher uptick in terms of business. Yeah, I think this was the slide I was referring to as to what happens in terms of business sentiment just post the inflation uptake and post the rate cycle coming down, because all the rate increases start to impact with a lag business sentiment, and which is why if you see, especially on the services side, and if you see business sentiment now across the Eurozone is almost at recession levels. And that tends to be a leading indicator then for, oh, okay. This direction, okay. I think we're done. We pretty much covered a slide. If I was to, yeah, I think just one, it's an interesting, it's again very busy, but I just wanted to make one comment, and especially on supply side, on the supply chains and what the impact has. This shows just the container spot rates of supply chains. So if you look at the top left graph, we see that the container spot rates have come down to pre-COVID levels. And spot rates is what you do on individual shipment, right? Charter rates are more longer term. The vessel charter rates have dropped steeply, but they're still higher than pre-pandemic level. But the spot rates have come down, but it has taken almost 3 years. And so this delay in coming off of spot rates, and the fact that charter rates are still higher than pre-pandemic, and that's created impact on growth and inflation. Yeah, and okay, this side, and you know, one point I wanted to make on we didn't talk about this. You know, clearly, we talked about the fact that inflation has come off, and it's been driven largely by energy prices, and this is good news, because European gas storage in 2023 is almost at 90%. You know, 2 months earlier than so. If you look at the 2021 chart, so
we'll not have a gas crisis in this winter.
This would show that, right?
Okay.
And of course, part of it, I think, is also lower consumption, and the fact that if in 2021 the lower graph or the x-axis is the number of days of the year. So we got to 90% of gas storage in almost the 300th day, and now we see that almost on the 240th day of the year, we're already hitting 90%, and that's contributing to a significantly lower inflation driver in terms of energy prices. So yeah, I think if you were to kind of wrap up, I just tried to put together just some key takeaways. If I was to just kind of summarize from a global perspective, we're seeing this year GDP growth not as bad as feared. Same time last year, we were estimating, the numbers. Inflation coming down, but due to base effect and better energy prices, that's what's driving it. But I think it's coming down faster in the US than in Eurozone. Central banks expected to start easing, and we're seeing that already. But most sentiment business sentiment in Europe still is almost akin to kind of recession levels. Finally, CE tends to follow Eurozone with some lag, and we're already starting to see Poland and Hungary cut rates, and the expectation is Czech and Romania also at some point we will start to see rate cuts.
But if the sentiment in Eurozone is to enter in recession, what's happening in our region?
Well, I mean, like I said...
What is your forecast for our region?
Well, I think we did have a forecast. I mean, forecast is not a problem. We can get lots of forecasts. I think we had a forecast for on the first slide itself. Yeah. So the forecast is actually positive, but you saw the forecast in most of Central Eastern Europe was positive 2 to 3%. But if you take Eurozone as a whole, we're seeing, I think the consensus view is just a little below 1% across Eurozone, which is lower than the US, but our ING forecast is slightly more conservative at 0.6%. But it's still positive across Eurozone, but definitely CE coming with a lag, and most of our Eastern European countries actually are positive at 2 to 3%, even 3.5%. But yeah, that's the. But there is a divergence. You see those jaws opening. The orange line and the gray line are moving in a slightly, separate direction, because we see the estimated recovery in the US at 2.2%, which is it's estimated to be faster than the rest of Eurozone, because Eurozone is still at about 0.6, 0.8%. Yeah, but this is a forecast.
Yeah, from ING global perspective, what is the main threat for our region and for our country?
Well, I think from ING's perspective,
because in the last 30 years, the globalization, the open the market, the FDI in all the countries, and in Romanian was the main driver economic growth. Okay, right now FDI is down. From globalization we go to deglobalization. Okay, the inflation it's higher, the interest rates it's higher.
Well, I think the biggest threat, if you look at it, the growth dynamics are still quite positive. And my view is that if you see these estimates where rates are at peak and coming off, inflation is declining, the growth dynamics are still quite positive compared to rest of Europe. So that's looking quite positive. Inflation, I think, is still a key risk and a headwind. It's not coming off as fast. And then, of course, it really depends kind of sector by sector. You talked about the automotive sector and the potential change in the business model of the automotive sector as it moves towards EV. And I think some of those dynamics is going to be key. But one underlying factor across industries is we're seeing the focus on costs and continue to focus on costs rather than top line. As we look at across industries, and that is something which is because of the fact that we still have sticky inflation, and that across multiple companies, cost is still a key factor, driving productivity, looking at costs. But yeah, it's kind of difficult to paint with one broad brush across the entire region. But the key macro risks and headwinds is really from an inflation perspective, but the growth dynamics are actually quite positive. I'm in the camp at the same time last year we were predicting a recession in Europe. So again, it's one of those recessions which never happened, right? Again,
So we are still in the good times.
I mean, it is. If you see, the rates are coming off now, so we are beyond the peak, but then we're still the sentiment is still quite recession-like. But yeah, those are the estimates that we have.
I mean, for Romania, if we are just bring it home, you ask what is the biggest danger. It's like in that movie, I've seen The Enemy, it's us.
Us.
Yes. It's not an external danger, it's an internal danger, i.e. we might miss the train again. Well, by the way, we were on a good train. Romania, over the last 5 to 10 years, was the fastest catch-up story in Europe. You know that, right? We are the fastest convergence story to the GDP average in Europe.
The people don't believe that.
They don't believe, but that's the reality. And I think the people in the room believe it because they made it happen. So yeah, it's easy. But the issue is, and we did that by being very entrepreneurial. With all the hindrances and the limitations that we know, we were a most entrepreneurial country, I would say, in the region. And that is what functions. We are flexible, we are adaptive, and for once in our history that plays well. Yes. So the danger is, the biggest danger is that we kill that, or we curtail the entrepreneurship that we have, i.e. the nimbleness of the capital, the easiness to do business, the easiness to move and be adaptive. You asked about electric vehicles. I just visited one of the biggest producers of components in Timișoara less than a month ago, and I visited everything. I stayed 3 days only in that factory to see everything. And by the way, nothing that they do is related to internal combustion engine, although they are, servicing, well, providing for lots of different producers, car producers, OEMs, like the assembly firms. And they were like the touch screens, the cameras, the sensors, the internal computers of the cars, and so on and so forth. So if you add it up, most of the value chain will still be there even with electric cars. If we are talking about the electric vehicles versus internal combustions, we are talking about the powertrain and the fine mechanics of the engine, right? So this kind of stuff. Well, if that happens, we will adapt, but a large part of the value chain of what goes into a car will still be there. And by the way, we are very adaptive. We are very adaptive. It's a lot of engineering services in Romania, not just production. Actually, I would be curious to see an FTEs, analysis of employees per each segment and how many engineers actually work in these centers. And it's thousands, many thousands in each company. So we'll still be there. The danger is that we kill this possibility to adapt. And that has to do with, of course, the legal framework, the tax framework, and so on. And last but not least, another danger would be, in general, when you are having it good, and let's face it, in PPP terms, in purchasing power adjusted terms, we are almost at basically Mediterranean level, so let's say Spain or thereabouts, which people don't believe, but we are there in terms of purchasing power, we're like Spain. Which is not bad, by the way, coming from where we come. The problem is when you are starting to have the good life as a society, you start to overspend and to become overconfident about your future cash flow. And this is what the risk is now.
And then the banks come with the lending and so on.
No,
Credit
not
card.
I'm talking about public expenditure. I'm talking about public expenditure. And bank come with lending that too. But the issue is you have to stay very grounded and very realistic about your cash flow outlays for recurring public spending. And this is what we see as a positive, by the way, and with this I end. The feedback we are hearing from the European Union institutions that are private to disbursing the funds for us, right? The resilience and recovery plans and so on. It's actually quite positive and supportive after they heard what the plan is. I mean, to address the deficit, right? To take the measures, some good, some less good, and so on. But apparently they are supportive at least to the direction or the commitment. Let's say the commitment, not necessarily the measures, but the commitment. So the money from the European Union looks like will keep coming. Okay, this is yes, keep coming, and they apparently are very eager to support Romania, which is again a positive message. So the investments you saw on today's slides earlier, the formation of GDP in Romania, and now the heavy pulling, why we are still growing, is only one reason: building roads. This is why Romania is still growing now, building roads. Everything else would have pointed to a kind of a flat or contraction. Apparently the money is still there to keep building. So,
okay, with this good message, so the economic growth in Romania comes to the building roads, I will invite the people in the panel to have a discussion about CEO strategy in this during difficult times, and I will ask Mona Lisa Ungureanu, CEO Agri Romanian. It's not a very good time in agriculture. Tudor Manea, CEO EMAG, Marius Ștefan, CEO Autonom Group, Andre Safar, Country Manager Group CEZ in Romanian, Albert Davidoglu, CEO Macromex, Corneliu Bodea, CEO Adrem și președintele Centrului Român al Energiei, Ionuț Corniciuc, fondator and CEO In-Store Power Provider. With your help, we try to have a good discussion about CEO strategy in these difficult times and your perception, what's happened today in Romanian economy. So thank you very much for our invitation. Okay, Andrea, stay here. Marius, stay here. So, who wants to start? Mona Lisa.
Bună seara! Dacă sunteți amabili să repetați întrebarea, eram în timpul organizării cu locurile și eram foarte...
Some comments about our situation, the situation this autumn in economy, and from your point of view, what is the, let's say, biggest danger of Romania for your business?
Situația în general în această toamnă este una, să o spun așa, mai puțin pozitivă și mai puțin optimistă decât în anii normali. Însă, în domeniul de activitate pe care îl reprezint, lucrurile astea se reglează pe parcurs. De ce? Pentru că domeniul de activitate agricol este foarte influențat de vreme.
Can you switch in English?
Would you like to speak
in
English?
Yeah, in English. Sorry.
Okay, that's great. So, in agriculture, we are in, let's say, not so good shape, because the weather is the main factor that is influencing us. However, we use to manage this step by step, because we are very optimistic that we will have some rains, and possible the things will go, let's say, better than it was predicted. So, highly dependency of water in agriculture in Romania, it's impacted us at the moment. The farmer sentiment is not so good, also due to the fact that there are prices which are not so good for their crops as long that they were invested with higher prices in their technologies. Also, there are some other pressure from political perspective. Romanian farmer is not very well capitalized. The interests are higher. They do not have access to capital. They do not have access to funds. We are active in input distributions. Sometimes we have the sentiment that we are a sort of bank for them, because they are asking commercial credit, which means a lot of risk for us. And we have to admit that...
Romania and the economy is based on the commercial credit in Romania.
Of course.
Commercial credit is higher than the
exactly, but
banking credit.
Keep in mind that always when the bank is assessing the balance sheet or profit and loss of the farmer, they are looking behind. We have to admit that when you assess the creditworthiness of one farmer, you have to look also forward to see the perspective of the farmer, if they will have, let's say, possibility to return the money. So
it's a difficult time, very difficult time in agriculture to be
yes,
here in this sector.
It is because there are pressures from, let's say, weather perspective, from macroeconomical perspective. There are pressures from also from political. And when I'm saying political, I'm also I'm looking for what is it's a very regulated market, because there are many aspects that the farmers need to take into consideration from legal perspective. They cannot use the same technology every year, because you know, there are some measures in terms of Green Deal and things that are impacting them.
So the Green Deal is a disaster for the business?
It's not a disaster. I'm not saying it's a disaster. It's something that they need to admit, and they need to be educated. Or we in Romania, we take it and we try to implement without we educate them, or to be prepared for this kind of regulation. So this is the perspective. I want just to emphasize something. We are still very optimistic. So agriculture managed difficult years. In 2020, it was a very difficult year. I bet that we will manage also. We have to be optimistic, and we will succeed to have a good year. Even this agriculture year, it doesn't start pretty well.
Tudor, it's CEO of MR.
Hello.
So,
Yes.
how is the market in online? Is down?
I will start from where Mona Lisa left off. We are very optimistic. So far, so good when we look into 2023. So so if we were to look at what were the initial predictions, that e-commerce in 2023 will grow something like double digit, I would say that we are there after 8 months. And this happened where on a retail landscape that grew something like 4 to 5% until the end of July, the latest INSE numbers. Looking forward into 24 and 2024, because now it's a moment when everybody starts to plan for next year. The way we see it is in a similar manner like ING presented. So there will be a GDP growth in Romania next year, on the, I would say, on the concern of PNRR behind. So all the money that will come from European Union will help and will boost the economy. Based on this economy boost, we will also have retail growth, and e-commerce, like this year and like what happened before the pandemic, had a natural growth which worked a bit higher than the traditional retail. So our view is okay for 2024.
For you, what is the main threat right now?
I would say
the reduce of purchasing power, the interest rates, because in Romania the interest rate will be higher in, let's say, until May.
I would say that a big driver of retail probably starts with unemployment. So when people start losing their jobs, then they will have to make, I don't know.
Unemployment here in Romania, it's very low.
Yes, but this will be a driver that could hit the could hit the retail. And then why do you have unemployment? I know, could be of bad tax measures taken or things like
Florin, do you think that unemployment is a threat to Romanian? It's a problem to Romanian from your perspective?
For now, no. We don't see. You see it first, companies going into trouble, and then you see unemployment because they have to lay off people. Fortunately, so far, the companies are holding up well across the board, so we do not see, neither us or the other banks, because it's quite public, you can see it in their financial disclosures, you don't see the risk cost, the provisions, the non-performing loans inching up, which is a good sign. It means that the companies so far, well, we need to see another day, but so far have been quite resilient because they've been preparing the ground for this years in advance. They learned the lessons from the previous crisis, and their balance sheets were much healthier. They didn't go too much into debt. They managed to kind of they managed well their working capital. That was the most critical thing, fondul de rulment. So in the end, when the slowdown came, you had a slowdown in volumes, because what happens now is the volume sales sold, especially in the consumer businesses, are going, definitely are down year on year. I don't know, 10, 15, whatever percent you are thinking, depending on the product. But after the adjustment in prices, then the total turnover is still up year on year. So in the end, if their costs didn't increase too much and they kind of control their costs, which is happening, they did not have viability problems. So right now, everybody is still holding up well, which is good. So no immediate danger of a visible increase in unemployment. But again, we have to be careful about it. I share Tudor's concern about
And
this.
the second,
you have to be staying on the ball and have always good, sane economic policy measures. So I think this concern should stay on the table. Yeah.
And the third threat?
Second, third could be, interest rates.
Rates.
If they keep up, they will, slowly stop credit. And part of the, let's say, non-food is the most expensive part of the non-food retail is financed through credit. And if the interest rates keep going, the credit stops slowly, and then this also will hit e-commerce. Let's say, could hit e-commerce.
Do you think let's say, for the next 20 years, we go from globalization to deglobalization? Do you think will affect Romanian?
Me?
Yeah, me, you, they.
Depends
Who
how
wants to answer? Andrei?
Depends how Romania will play in this. So if we play right on the right trends and we see this switch to electric vehicles, and if we build the necessary infrastructure to serve this trend, then we will be okay. If we don't build the necessary infrastructure for this, then probably Romania will suffer in the future. At least this is our view.
Andrei.
So I think from
Albert and Andrei.
Yeah. So from localization versus globalization, I think this is going to play. Localization is a good thing for us. Why? Because we are importing so much in terms of processed food or food in general. So we need to do that because we are too dependent on the imports. So this is something which needs to happen, and this is very good for the Romanian, because this is going to reduce the dependency on the imports. So this is going to help Romanians to have access to a better food, maybe a cheaper food, but in the same time reduce these import issues, because this is creating inflation as well. We are too dependent on that.
Andrei?
No, I'm not expert on geopolitics, but you can see
It's
that
geoeconomics.
No, but let's say you can see that the world is changing, and so certain blocks are being formed, and these blocks are somehow going to cooperate more among themselves, and this is going to have the impact on the supply chain in general. And this is great opportunity as well as this is great threat for every country. It just depends on how the country will use this advantage or just not use the advantage and then feel the consequences.
On the energy side, what is right now the situation and how will be the next year?
That's on energy. Let's say last 2 years were really difficult. It was very difficult for the energy companies, and it was very difficult for all the economy because, let's say, the impact of the energy prices went through the energy companies to overall economy, and it was huge hit. And let's say we saw now that the main driver of the price increase is the gas is on the good track. So let's say we learned the lesson. We, as a Europe, we stop entirely belief on the market and that market solve it all. And we started to really prepare and we started to make sure that we have enough gas before the winter. So this is something which is really positive. And unless something very unexpected happen, we are let's say fine. So meaning we are not gonna see the peaks of the prices as we saw last years or last 2 years, but still with the disclaimer that something unexpected happen. But what we have, and I wouldn't talk necessarily about 1 year ahead, we are in front of major change in the way how we produce and use energy and the type of energy we are using. So we committed as a Europe, we committed to certain targets. The targets is we are going to be emission neutral by 2050, which means the way how we are using energy will change.
Yeah,
And
but what this means for the prices? Because all the people, all the company look at the prices. At the end of the day, it's important, first of all, to have energy, and second, what is the prices of this energy? Do you think the prices will come down or will stay here?
No, and I think this is very interesting question. And again, what is going to be maybe what will be the price in 2 years, 3 years? That's we can be discussing about the energy price, and the prices are going to stabilize. It will stabilize. We expect on something which is higher than it was pre-crisis, but it will stabilize. But more and more, we are moving into the distributed generation. We are going to be more and more talking about what is the level of investment, what is the level, let's say, of the depreciation from that investment, which is going to be falling into my costs, in order to have the energy. So the consumers will really become more and more active members of the energy sector. So it will be more about the investments. It's not going to be for how much I'm buying megawatt, because a big part of my energy needs will be produced in the place when I'm consuming it. And that way of thinking will significantly change. And this is something what we need to learn. This is something which in the next 25 years, it will mean really massive investments into, as a massive investment of the energy companies, but as well massive investments of everyone who is consuming the electricity. And what is very important, and we were using there was a discussion about the electrical cars, which is a very nice example. So we have, let's say, as a company, we have the targets which we should be emission neutral by 2040, and we should be on the half of the emissions of 2019. We should be by 2030. So we are now working on how to achieve it. And when you are looking at the numbers, you are looking at the costs. The costs are huge if you need to do it fast. If you spread those costs over the period of 15, 17 years, you are just, if you do the right things every year, you don't really see it. But you need to start to do it now. You need to make every decision which you are doing now. You need to have in mind that sometime in future you need to be neutral. And this is going to be, and this is very important for every business. The sooner every business will start to think like this, less painful that transition will be. And I think the other thing which is like a huge threat is, as the businesses will start to do it, as the banks will start to look at it as well. So it will be translated into cost of financing. It will be translated into everything. You will start to see that if you ignore that thing, because you think that this is maybe too expensive, this is too difficult, or you don't understand it, you will start to realize that you are losing the market. Because as the business is, because what is important, let's say for us, and that's something what we started to communicate to the companies which we are taking services, we are buying the equipment. It will be very important decision factor for us once we are doing the acquisition. So if you don't go this net zero path, if you don't really work on it gradually, step by step, one day you might just realize that no one is buying from you because you are not qualifying, you are not helping your business partners to achieve those targets. You are not making those business partners to be eligible for certain credits. You are not eligible for certain things. You are disqualifying them from the tenders. So this is something which is very important to start to really plan and think about it as soon as possible. So like that discussion what you are saying, what is the price of electricity in 5 years? It's a relevant question, but it's really short-term thinking. What is far more important is what is my position in 10 years? How am I going to source my energy?
Will be dead.
But that depends. Like meaning, I think like it is possible. Like in 10 years, you might be dead if you don't really do the right decision starting. Let's say yesterday.
But the banks are willing to put money on this huge project.
I think that the banks are definitely looking on the huge projects. But as well, what I'm saying is, I'm talking about distributed generation, which are not the huge projects. Those are rather smaller projects. If you accumulate them, it's a huge amount of money because it's everywhere. But those are let's say hundreds of thousands of small projects across Europe. And where is going to be like one of the risks is it's labor force. We know
Labor force.
We are because
from your point of view, the main risk of Romanian will be labor
for all the Europe. It's not for the Romanians. It's because when we are looking at this energy transition, which is a huge amount of money, so we see that we need to start to invest 3 times more than we were investing until now every year, which means we need to hire 3 times more people, or we need to be more efficient. But we need 3 times more companies to deliver those energy transition, and we have already now we have zero unemployment. We have all our talents from Romania. They are attracted to the Western Europe, so we need to make sure that we have people from somewhere. We were talking about opportunities that there is going to be some, let's say, change in the way of production.
Right now, for you, it's a pressure to raise the salary because the economy said that the next trend in inflation will be the wages, the rise of the wages.
No, but
inflation come with the rise of the price in energy, and next trend will be the rise in wages.
No, but our problem is we will not make 3 times more people by doubling the salary.
No?
It's not about the waging. You don't have people, so you don't have the people. It's not matter of salary, it's matter of availability. So we need people in construction, we need engineers. And if they don't exist,
also you need people in banking.
No, but I cannot get the bankers building.
Bankers don't do anything. No, I think just to add to one point, Christian. I think the point made on banking, looking at those projects and finance. Just to give you a number, I mean, last year in 2022, just the total volume of sustainability and renewable linked loans and bonds which ING actually executed was close to 100 billion euros. And so if you add up, I'm talking across the 40 countries from a companies and corporate banking perspective, and this year we're looking at at least a 5 to 6% growth in terms of having a target. So clearly the commitment to getting to net zero and leveraging just our ability of working with our clients and looking at what we call kind of the sustainable finance as a proportion of total finance. These numbers are quite significant in terms of just the focus for us, just to put a number there.
Maris, your perspective.
Yes, it's very interesting listening to the panelists and also talking to people in the business. I remember a joke, you know, like how is the Romanian economy in one word? In one word is good. Maybe in 2 words, not good. You know, so so different sectors, different problems, and different perspectives. I like most
It's
of
a
my
good or not good times?
I see it's very good to start new things. Because whenever there is volatility, like in investment, they say there is alpha, you know, so there is a possibility to make money. So things are changing. I think there is a sector which is moving even faster than the energy sector, and this is the mobility sector. There are so many things moving on, and in my business we try to anticipate what's going to happen in 4 years from now, how we're going to sell the cars we're buying today. And it's close to impossible because there are so many things, you know, moving, and like it seems like every week there's a new announcement in terms of battery range, new models, regulations. So it's, if you like, you know, volatility, it's a great time.
But
to
Romania will be a winner or a loser in this trend?
So today there is no car which is sold in Europe that does not have some components manufactured in Romania, you know, so cars manufactured in Europe, not imported from China. So in terms of manufacturing, Romania has a very strong say in this, and they have the factories that you mentioned that do it, and they will continue to do that. Yes, the size will decrease a little bit because just in terms of number of components, a classical car, if I remember correctly, has like 7,000 different SKUs. An electric car has 10 times less moving parts than a classical car. So yes, there will be less work to do in order to build a machine. It will be more like building washing machines, you know, like than classical machines. But imagine a washing machine with a very strong computer and some cameras. This will be the electrical cars in the future, and the trend is here. So it's not something in the future. Okay, we have to look. No, the tipping point has passed. So electric cars are here. You will see them more and more every month. If you look around you, you'll see cars on the street. And where we think we're at the forefront of this, so we're buying a lot of electric cars. We're putting them on the street. We try to also popularize, you know, to tell people about it. So we're quite, for us, it's quite clear. This is a direction where it's going. You know, Dacia Duster, you know, one of the most popular cars manufactured in Romania. The Dacia Duster diesel will cease to exist this year. They produce, I don't know, the last 2,000 pieces, and it will be out. There will be only gasoline one, and then there will be some electrical alternative to this. So diesel is out from all the manufacturer, and soon all the classical fuels will
And
go.
from your point of view, the main threat for Romanian?
My threat for Romania, I'm going to mirror what has been said. I saw on the slide here, I had a question. I saw unemployment in Romania is 5.5%. You know, it was on the slide. I want to find those people. You know, where are they? You know, because I like to hire some. You know, it's quite interesting because the feeling we have as employers, and because we are growing and we recruit more and more people, it's really hard to recruit talent.
So you say that is a fake figure?
No, it's a fake, but
no, that's the official unemployment.
Official.
But having said that, yeah, I fully agree. It's 5.5%. It depends how you measure it, but that's a different story. We have like what, 130,000, I think, foreign workers allowed in Romania this year,
yes.
Mostly South Asia, and that says a lot. It means that in many ways we are at full employment, and it also means probably unemployment is unevenly distributed in the country because people are not unemployed where you need them. That is another issue, and it's a mismatch of skills also. Yeah, you might have unemployed people that don't have the proper skills for whatever you need them. It could also be that, and you also have a competition between the private and the public sector, which is not very healthy, if you ask me, given the level of incomes between the two sectors. But that's a thing that we know for the last maybe 10 years.
In public sector will come a reduction of the people. If you need a secretary.
That remains to be seen again, the good match, the good fit of skills there. But I fully agree that the figures, doesn't sound... but you have zero probably in cities where you have the automotive industry. The unemployment is basically zero. they need to, if we're talking Timișoara or Iași or I don't know, Bucharest or Sibiu, you have to go 50 kilometers, 80 kilometers each day to bring people 80 kilometers away or 100 kilometers away and bus them in and out every day, every morning and every evening, just to have so that is zero unemployment in those areas.
Do you need people? Do you hire people right now, Marius, Cornel?
Yes, I remember I was talking to a CEO of a large manufacturing plant, and they're saying that, okay, they have around 600 positions open, and they're like, what kind of skills do you need from people you hire? Is like they need to be able to stand straight for 8 hours. You know, this is the only skill they need. You know, the others will teach them. You know, so the other thing. So this is unemployment, but second thing is interest rates. You know, it's for us it's a big cost, and okay, we're now reached a level. It seems like it's a plateau, but if it will continue to rise, it's going to create big problems in the economy, and also the availability of funding, if this will decrease. Now there is, but if this will be coupled in higher interest rates and with low availability of funding, then this could create real problems in all industries.
But all
Romania.
the banks, they have money because the deposits are higher on the credit, and all the banks said,
Yeah,
I want to
but you
give
have to
credit, but nobody comes to us.
But look at the balance sheets and see where the money is. Most of them are in treasury bonds from the states. So that's a different discussion.
Regarding the shortage in workforce, the good news, as you all already mentioned, we are importing labor.
How many people you have on your...
We have around 3,000 people, and this year we were involving in our activities almost 300 people from out of the Europe, but they are actually coming from Asia. And there is a high demand on this, and they are adapting very well. It's true that they have a very low involvement work. Let's say they are low workers, low paid and low educated workers, but they are covering very good their jobs, and they been very well adopted by the Romanian colleagues. And I think we...
So, do you think it's a solution for Romanian to cover
definitely
the
yes.
shortage in...
Definitely
in
yes. If our Romanians left for better jobs in Europe, it's the time to bring other workers from other countries to work in Romania, to replace them, which is the natural movement of workforce mobility. This is very... But imagine that Romania in the last years, we have, by regulation, a limited amount of workers that we can import. Actually, we export 5 million Romanians, or 4 million, whatever, millions. We are exporting millions of Romanians, and we are allowed to import hundred thousands of foreigners. I think we had 200,000 foreigners allowed to work in Romania this year. Which
so
was,
let's
which
open
was,
the border.
Which was not possible to sustain.
So you mentioned that it's a solution for the economy, but it's a solution for demographic problem?
Definitely yes. Definitely yes. This is happening in West countries. Like why Germans were so open to welcome Syrians immigrants, because they have a very labor-intensive industries and production also, and they have a very low birth rate. So they need a lot of foreigners to replace these jobs, and we need also.
Andre, is a solution for
No,
Romanian?
what I want to say to this, but because this is another risk, or this is another thing we will have to face. It's about the diversity and inclusion. I'm as well. I'm Czech, so I'm from.
You are more Romanian than the Czech.
I'm more Oltenian.
Oltenian.
No, but the Eastern Bloc, the ex-communist bloc, is white bloc. We are not used to have the people of different cultures. We are not used to live with the people of, let's say, different beliefs and so on. And this is going to be something which is going to come with all of these people, and we need to as well get prepared for it, because it's going to be another challenge. It's going to be really inclusion of these people. These people now, they are coming. They are maybe 200,000, but they are just coming and they are doing some work. They are here for the job, but over the time they will start to settle down here. And we need to start to face it, because this is going to be happening. We have a lot of jobs which needs to be done when it comes to manufacturing, when it comes to construction, and we have two options. Either these people will not be here, and we will not be able to build, we will not be able to manufacture, or we are going to find the way, and we are going to have these people, and we will have to start to really work on these things, on how to live in the diversified world, how to include the people, how to accept the people of different cultures and different beliefs. And this is something which, again, in next 10 years, it's gonna be on the table, and it will be another big change which we will face.
So the main threat for your own point of view.
Yeah, what to say, you know, it's a bit not so bad with us, because we have about 1,600 people, and I must say, yes, we started to, you know, have a permanent, you know, need for employing new people. We don't see it like the main threat, but obviously, what I believe is more difficult, the bigger threat, is the fact that the level of educated, not superior education, but educated, like people with technical skills, coming from a technical school or from a high school, it's very low. So the educational system, it's the very low level. That's why I believe the best thing, and this is what we do internally, is to build a type kind of learning inside the organization. So as Mario said, we need people that are able to stand. So we take them from there and learn them to do specific jobs. And this is, I think, more of a big threat to us than you know, finding people.
Okay, and the second? Do you have money, enough money?
No, of course.
No.
How comes? I mean, you know, I am an entrepreneur since 30 years, so I never had money, you know, enough. We go to the banks, you know, send us back 3 times, then we come back, and actually we build now quite a better relationship with the banking system, and our company improved a lot, so now we are bigger. This year we are going to have the highest turnover and profitability. That's why I believe it's also the relationship, you know, changes with the banks. But obviously, cash for our activity, like contractor, cash is a big issue, because you sign a contract and you usually don't get any kind of advance payment. So you have to start working and you invoice at the end of the work. And this might be, I don't know, 6 months or even 1 year after you start working. So you have to pay salaries, you have to buy materials, and then at the end you invoice, and after, I don't know, 100 days you get the money from the customer. So you have to cover all this working capital.
Okay, and the third threat, first is working force, the second, the bills, and the third?
The third might be the first is my assistant. If she is missing meetings or my agenda, that will be a major threat. No, but coming back to your discussion about globalization and deglobalization, I believe that this is where we are now, in globally speaking, at the age of big transformation, a revolution. We come from a conservative way of doing politics and economics to a progressist, or how you call it, type of economy. That's why we are moving now from what also Andre covered here. We move to this ESG, which brings all this responsibility, the environment, and this is you know, bringing all this huge transformation, which is energy transition. So we move from you know, fossil fuels to greener way to generate energy, and this is going to be massive, and this is going to impact all the businesses, of course.
In what way?
Look,
Because all the
look
people
to
read
Romania. I
all-
will give you a few figures. Yeah. So this year, it looks like we are going to have the lowest electricity consumed in Romania after 2020, where half of the year we, you know, economy and industry didn't consume. This is, and in the same time, we start to build thousands and thousands of megawatts of solar, wind, and so on. And you start to wonder what to do, why? I mean, who is going to
buy this
buy
energy?
this energy? So on short term, that is for sure going to be a problem. Because obviously, and this is also coming from the fact that in the first 7 months of the year, the industrial production in Romania went down by 5%, which is coming somehow to explain this 7% decrease in the consume of electricity. But let me give you another figure. In the total spending for energetic consumption in Romania, the electricity is accounting for only about 30%. All the rest is other type of energy. So wood for main heating, yeah, gas, wood, and so on. Just imagine that we have to move, and we are not talking here about electrical vehicles yet. This is going to bring a bigger problem. But we will have to move from all this fossil fuel-based type of heating to electricity in order to become greener. And this is a move. We have European Union directive that we are not allowed anymore to install from 2029 individual gas heating systems, and so and so. Yeah. So we will need impressive amount of electricity in the next couple of maybe 5 to 10 years. This is going to bring a pressure on the, of course, being able to install so many capacities, and this is going to put a pressure on the price, obviously, because
The price will be up or down from your point of view?
there is no way to go.
Andrea said that it's not relevant.
No, of course, he's selling energy. I'm not selling energy. So the price cannot go down. Cannot go down. I mean, depends how you compare. If you compare with the last year and the energy crisis price, no, that was a madness, and that was having to do with pandemic and the war. But looking medium to long term, you have to recover all these huge investments, so the price of the electricity will, long term, will increase.
Okay, and the interest rates, from your point of view, will be down or will stay higher than more than we think?
Look, to me, interest rates are already too high. So
Too high.
Of course, yeah, we have to come down.
Andrea.
Just on this electricity, just to clarify it. One is, if you are now buying 100, you are paying 100 RON for your electricity. In future, you will 80% of it you will most likely produce by yourself. You will be buying maybe just 20%. So that's why it's going to be less and less relevant, because the thing which you are buying from somewhere, the proportion will be significantly smaller. For that significantly smaller part, let's say Romania is talking about some projects. Romania is talking about SMRs. Romania is talking about renewables. So if you want to build the SMR, you need roughly 100 euro per megawatt price for the lifetime of that unit.
100.
Roughly.
And right now, what is the price of the energy?
Now the energy, I think like now is
80,
I think
60?
It's like 700 RON, so it's like 120. But the economy before the crisis was paying something like 36 euro per megawatt. So that was the wholesale market price was I think 2000.
So the break
2019.
even for SMR is 100 euro per megawatt.
Roughly, we are talking about 100 euro, which is including, let's say, investment, financing, and everything. So you need to have roughly 100 euro. Technology might improve, it might be more efficient, but you are talking, it's, let's say, these energy sources will cost you something like this. When you talk about renewables, you are looking at on the costs where you would need something like I think there were the auctions in Serbia, 85 euro or something like this for the wind, and I think 65 for the photovoltaic.
So the
for
break
the CFD.
even. So for the break even, it's 85.
So the investors are committing
Okay.
to build it for
And
85,
60.
and I think 65 for the PVs, if I'm not mistaken. So we are talking about this energy. So which means, if you have a factory, it makes sense for you to really build a PV, because you are able to produce for the equivalent of base load price of 65. So this is where this is going. And again, as Cornelius said, the mix will significantly change. Like, energy is not only electricity. So all this no emission means the way how we are using all the energy will change. So, and that's something which is that big transition.
Short
Yeah, I just
commentary.
want- I sometimes agree with Andre. He's my customer. Most of the time, I agree with Andre. But this time, I have to remind that yes, indeed, we are going, and I believe so. What he said, that we are going to generate ourselves more and more electricity. I don't know whether 80% or something. But let's take a factory, for example. A factory installing a PV will optimistically cover maybe 20% of their consume. But they will still have to recover the investments. This is a cost. Yeah, we'll have to put it it's not going to become zero cost if you install a PV. Of course, it is going to make you more independent of the fluctuation on the market, more, I don't know, sustainable and so on and so on. But still, the prices are. But why I'm saying that the prices are going to increase? Because Romania, and this is, if we talk about threats to the economy of Romania, this is probably the first one. Romania used to pay for a megawatt of electricity for most of the years behind, by 2030, 35 euro a megawatt.
35.
35 euro a megawatt hour. And you heard what Andre is telling. And even now, the mechanism to purchase, centralized mechanism to purchase the energy is 450 RON. I mean, 90 euro a megawatt hour. So we talk about 100 euro. So this is 3 times more. This, we already start to feel it in the economy, because this is 3 times more. Then labor cost. We used to pay an, worker with 500 euro net, maybe 800 euro net 5 years ago. Now, the minimum wage in my company is close to 1,000. The average in the working level, it's probably 1,500 euro. So this is kind of 2 times more. So when you have the labor, 2 times more. The energy, 3 times more. Then, yes, we are close to the Central European and even Western European countries at this level. And now there you have to bring different type of factors to stay competitive. And to stay competitive with respect to European countries, but also with respect to other areas where, the prices are much better. I mean, Eastern global.
Tudor, are you prepared to buy energy at the higher prices?
We had to buy it last year and we survived. So on the energy front, we also have, let's say, our factories. We have 2 big warehouses next to Bucharest. We install photovoltaic. It's good in the summer, but in the winter, like Cornelius said, you have to go and you have to buy from the open market. And another surprise for us was something that when some suppliers knew that we had photovoltaic, they increased our price, because didn't have a regular consumptions, and we were not predictive, and we consumed a lot, and this caused some issues. So photovoltaic is good, it will be a trend, but I think on the regulations we still need to work, and I don't know how it will solve up to 80%. Now it solves less. Then related to what Corneliu was saying with employees and salaries that are growing, we somehow joke in the company, because when the minimum salary is growing, okay, we are also growing to remain competitive and to be able to hire, but on the other side, we know that all this money will come back in consumption. So we also estimate that the revenues will grow in the future. And again, like Corneliu was saying, as an economy, we, Romania, need to think about what will be the value-added industries or sectors that we will add in the future to be able to close the gap further with Western Europe.
And do you have some idea?
I can speak about what we did. So what we did was that we constantly have business cases and we test new technologies, for example, in the factories, in the warehouses. And we know that once the minimum wage reaches a certain level, we unlock new technologies. So, and we've had this roadmap for a couple of, close to 10 years now, and we knew that when the minimum salaries will reach a certain level, we will need robots for picking. We installed them 2 years back. We know that soon the business case to install robots to build the to build the boxes for the parcels will unlock. We started to test them. So we need to adopt technology, and with these technology adoptions you are more productive, and you also need to pay more the people who know how to operate this technology. And this is, we see that digitalization and technology adoption will drive further the Romanian economy.
Albert.
So a couple of views on this link with the people. If you look at the salary increases in the last 10 years, before this inflation we had around 7 to 10% in the fast-moving consumer goods industry. Then from inflation we had 12-15%, and this is how wages increase year on year, which means that the companies had the good P&Ls to support that. And then from now until the next 5 years, I think the salaries will double in Romania. So this will be double, yeah, because this will be driven by a couple of factors. First is the lack of people, the lack of skilled people. Now, what is happening in the workforce right now is that the people have more options. They can be self-employed. They can work for different, like PFA, for example, or they can work. They can do TAS, or they can do Glovo. They can do different things, and there are less people available to work on the regular contract. We've seen that in the blue collar. So the blue collars are simply saying, I want to be independent, I want to be free. So, which means that this structure plus the competition between the companies, this will increase the salaries significantly. So we have to pay attention at the salaries, and of course you have to be competitive. You want good people, and we are doing exactly the same. We are training people in the company, because there is decoupling between educational system, schools, and what businesses needs. So if you look at the number of people that you need in a certain level, you cannot find them. Therefore, you have, we are hiring people with good competencies, and then we train them in different areas in order to make them good for what.
So the wages will be up. Yeah.
The wages will be up. I'm not so sure about the inflation going down. And from food point of view, I'm talking about food business. I think we are not taking into account what is happening because the food is coming from the land. The land is less available. There is drought. There is the change of cultures of the plants for different. The one who is paying more, for example, cereals. What is happening is that the different vegetables are less available. For example, the availability of the peas around Europe is less with 30% because of the drought and the less land. And then what that means is the inflation in food will go up. Plus, you need to be ESG, you need to move to a different packaging, You need to have less plastic, more sophisticating, production capacities. All those things are adding cost. That will go into the product. The cost will go into the price. Because what we've seen in the inflation is just the energy going down, but the food is still stubborn. And with less food available, this is going to be an issue. So I think the food prices would stay at a certain level. I mean, maybe a lower demand, structural, would make those prices going down. But if that wouldn't happen, then the prices will continue to be at a certain level. That's why we are seeing in the last period still stubborn in the food inflation, because that's plus you need the energy, wages, food cost, all those things which needs to be. That's why innovation, added value, productivity, digitalization, all those things needs to happen in order to compensate. I mean, you need to have less people overall in the organization or higher productivity per employee in order to generate additional value. So we need to structurally change things and think about those things and see how we can, move from one point to another. Because otherwise, if you, do exactly what we've done now, I think it's going to be tough.
Monaisa, your point of view.
My point of view, I have to share the same opinion with my colleagues regarding the people.
What colleagues? All of
People
them?
who
So the
teach-
prices will be up in energy
yes,
and
the
food?
price will go up. And based on my experience, after an inflation period, very difficult to come back to the previous normality. Always it was like this. I have to emphasize something regarding people. It's true that skilled people are really necessary. We are living in different times and we have to upgrade each year. I have experience in our business because our business being a distributor, it highly depends on people. We need sales force that need to go at the farm level and transfer the know-how to farmer, because we are not selling. Our business model is not aligned with just selling products. We want to sell also know-how, to somehow to transfer know-how and to prove and to find the right, let's say, arguments for our farmer that they need to use some technologies. And this is costly for us. We have to invest in our sales reps each year to upgrade their skills in agronomical skills and also commercial skills, because they need to be on the both parts of the business, also commercial and technical. And it's very costly. Of course, it's quite challenging when all the other competitors are providing them higher salaries, sometimes fixed salaries, because we try to manage with salary and also with a very good performance management scheme that we have implemented at the level of Agri-Romania. So I don't believe the prices, including for food, will decrease. I think will be quite challenging in the next period of time. So I'm in general a very optimistic person, but from this perspective, I don't think so.
But the salary for Florin will be up.
For Florin?
Yeah.
No, I think just one in terms of just strategy for business, as we see wage inflation last year, and clearly compared to the previous periods across Europe, we've seen a significant uptick in wage inflation, which is driven by inflation. And one of the kind of upshots of that is, as we get into next year, and I agree, some of that is very sticky inflation. Inflation is, at the end of the day, the rate of increase of prices. So as we get into future periods, one of the challenges is going to be how do we have visibility of growth of income or revenue, which is higher than growth of costs, because and that increasingly is a focus across the board of really managing costs at a time like this, when we've seen inflation coming through. It's coming through in salary inflation. You've got to be competitive, the labor market is at near full employment, and so getting into future periods, some of this salary inflation is sticky, and if your wages are growing at 4, 5, 6%, then how do you ensure that you've got higher income visibility? Otherwise, you start to have what is classically called negative jaws, right? Which is your expenses growing faster than your.
So the salary for Florin will be up or not?
Above or below
At
inflation?
the end of the discussion.
No, I think Florin is very highly paid, so he's fine.
Very highly paid. Ionuț, your commentary.
Again, regarding the future and the
Yeah.
cost of the labor and
Cost of the
energy,
labor.
we have in our business it's a intensive labor intensive business, and again, I will say it again, at least for a blue collar, there is a high potential with workforce coming from the Asia at least. Only we have to be allowed to import, because the government, as I said, it's limiting the amount of the number of foreigners that we can import. And secondly, to be open and welcome them and integrate. That's one of the solutions. Also, we will have to struggle with our local workforce, but to be open and find a solution elsewhere, as many West European countries are doing, and the rest of the civilized world is doing. The society is more diverse, and this is enriching the local culture with the new, starting from the food.
So the solution is that migration will save Romania.
Will save Romania. If you have question for Uday, put some question, be the journalist. Marius.
Yes, in your job you're looking at multiple economies. What would you say it's the Romanian's strong point from an economic perspective?
Well, I think if you see, it's clearly amongst all the countries that at least we have business in terms of the growth dynamics. I would still look at from it's more emerging rather than developed, and that is clearly higher growth opportunities and potential, and we see that in business growth dynamics across all segments of the business, and that is also reflected in higher potential growth rates. Clearly the traditional strength has been, I think there's been discussion about technical competence and engineering, and that's been, and we see that in automotive, which is a big sector, really competitive cost structures on labor, and which then drives higher productivity. So I think these are the two key drivers. It's still I would say a growth market and growth economy from that perspective, and which is why in fact our business over the years has been a completely green field in an organic way, grown across all sectors, be it private individuals or corporates, or what we call small and medium enterprises, or business mid corporates. Across all three, from a universal business perspective, it's been an organic growth, right?
Yeah, one more.
I want to ask one more question. Maybe it's a little bit more personal. What keeps you awake at night?
Well, I sleep very comfortably. No, but the neighbors. No, not
How
the
you
neighbors.
can do that?
No, I think if the question is about headwinds, and if we see the classic headwinds as we get into from a planning perspective, would be inflation and uncertainty in the macro. I think these are the two key factors. This is that time of the year we're also looking at planning for next year and things. So while you see inflation coming off, I agree. I think there's a comment made on it's still sticky, and we still have certain uncertainty in the geopolitical environment and in the macro, and that has impact on business. So I think these are as far as the business and macro is concerned, and the other I think there's been a lot of discussion on human resources and talent, and I think that's a really key aspect of our business, because I think that's the big difference that one can make, and ensuring that we have the right engagement of the people and the talent pool and the culture in the organization. I think that's the other key driver.
Albert, put a
I have
question.
a question. Which are the industries which you are a higher appetite to invest, and which are the other industry which you are not?
Well, I would say, across the board, there are certain kind of sectors where we believe we can make a difference. So not so much as not appetite to invest, but in terms of how the business, we believe we can make a difference to clients. And from that perspective, we have broadly kind of 7 sectors in energy and telecom, media, and on the real estate infrastructure, and on consumer finance. So clearly, if I look at from a wholesale banking or corporates perspective, these are the broad sectors which we're seeing growth. For example, over the last 12 months, we've seen significant uptick on the energy side, coming also from renewable energy. I mentioned about the just the investment in sustainable finance, and of course, as a financial institution, also just the financial institution sector is also big for us. So yeah, I think it's more a question of where we believe we have expertise to leverage our network and add value, and that's the endeavor for us to grow. I'd also like to make a comment on just the network for us, and clearly we see ourselves as a European bank and powered by the global network, right? So and especially across Central Eastern Europe, we believe the network is really key across all the CE countries, including Romania, and that's where we can really make a difference for clients who see value in the network that we provide. So we have clients who work with us across 23, 24 countries across Europe. So we would be, and that's a core strength. Having said that, we have strong franchises in the Americas and in Asia, but the heart of the business is essentially serving and from a European corporates and helping both inbound into Europe and outbound from Europe. So that's the key.
Thank you. Yeah.
Everybody gets to ask me a question.
Okay, 2 questions. First one, if we need 20 million euros, you help us? Or
Sorry?
No, it was a joke. So
We need 100.
What's your take on, I don't know, fintech development? So probably in the retail space, you get some competition and probably you might lose some transactions, some clients to different fintechs that are growing around the region. How do you see these ones developing in the future in Europe?
You use business to Revolut.
On fintechs.
Fintechs.
Yeah, fintechs.
Yes.
Okay.
I can take this.
I can go.
Yeah.
It's in the region, Romania and so on. We see them. The issue is that at first, actually there was hope that this will be an ecosystem that will work together rather than compete, because it was the fintechs were looking for white spots in the markets where they would be doing better than the established banks, because the established banks are following thousands of regulations, so they are burdened with a lot of regulations. I'm not commenting why it's just what it is. And then they have fixed high fixed cost bases and so on and so forth. So of course, and they are by nature, they should be very solid but also large organizations by any standards. Of course, as an adage goes, there are two types of companies, good ones and large ones. Yeah. So when you are large, you are less nimble, you are less flexible. And then, of course, the fintechs were looking for the ways to contribute where the banks were probably moving slower or not nimble enough, not fast enough. And then the hope actually from the banks was to work with these people. So that's why most of the banks, like a few years ago, up to 5 years, 7 years ago, were busy establishing kind of networks of partnerships with fintechs, incubators to help fintechs grow. And so it was not a competitive problem, it was actually a cooperative problem, a cooperating problem or opportunity. In time, the reality showed that actually not many ideas work because the system is rather complex, the regulations are quite daunting and so on and so forth. And now if you look at the fintechs that are really still out there, not very many, and also it's a lot of like maturing process there, and you have only a few that are actually doing something big. If we are talking about the likes of Revolut and so on and so forth, obviously they are making a mark on the market. I would say that still you have certain segments in the market where it makes, where a fintech makes sense, and other segments where banks will still be there. It's just, I think the fintechs had a good, how should I put it, hygienic effect on the market that it kind of spurred banks more into action. And that was the benefit to the customer. And in the future, I think the banks will still be there, will still be doing much of the heavy pulling, but all these fintechs that still manage to succeed will either cooperate or by competing in very particular segments, I would say, on very particular products and so on, will actually spur more innovation and more flexibility in the banks themselves. But I think the structure of the financial industry was pretty much stay the same because it's all about capitalization and risk management. And for that, you still need big, quite complex, unfortunately, organizations. So that's it.
Do you want to make a comment on this question?
I mean, I would just add the fact that we have globally more than 36, 37 million clients, retail clients, and in a large number of the markets, a significant proportion, upwards of in some markets even 60, 70, 80, 90% of all transactions are digital now, and so in fact mobile first is a key strategy, not so much from the bank's perspective, but that's how consumers interact and interface with the banks. And I think ING has been at the forefront of that entire endeavor, and we see more and more clients engaged on that front. So while obviously fintechs I think bring nimbleness and bring innovation, but if you see across all segments, not just private individuals, but on the corporate side, I think clearly in the engagement with clients, digital transactions and continuous innovation is very much part of the banking DNA. And
Andre, a question. Your question.
No, I would have a question, which is again, it's related to energy transition and ESG. So because what we see is, it's a really topic which is starting to make the difference in the financing condition on the Western market, and gradually it's topic, and we are discussing with the local banks as well. But we are, let's say, in the phase when this is rather establishing and making the opinion on how this should be really part of let's say assessment of the companies when it comes to financing. Where do you see that this ESG component will start to be really relevant for you as a bank in Romania, for the way how you are going to be looking at customer, the way how you are going to be looking at, let's say, conditions and so on? Yeah,
I think for us, if I was to just look at, if I was to just highlight two strategic imperatives for us, and what we call as making the difference to our clients. One of them, of course, is the client experience, and that encompasses our offering, our the mobile transactions, and how relevant it is, and accurate and instant. And so the whole customer experience piece is one, and the second is really being a sustainability pioneer. And for us, that is absolutely center of plate, and it has and not just in terms of the business that we do and the impact that we have, but also it being really center of plate in terms of how what kind of aspirations and ambitions that we have as a bank and with clients. So what does that mean in actual terms? I think moving from identifying by segments what are the key sustainability goals for us, and moving from just having a number of what we call sustainable finance transactions. I mean, and leveraging our 700 billion kind of balance sheet and making a difference on that front. So clearly, it is. I would say we are already there in terms of it being center of plate, from number of transactions to volumes mobilized, to the proportion of sustainable assets versus total assets. And I mentioned earlier today about of really working with our clients and building the transition pathways for clients. And now we take this to the next level. We call it a Terra approach of really looking at it sector by sector, for energy, for real estate, for infrastructure, on the retail side, and starting to look at what proportion of our, for example, the lending balance sheet is now sustainable, and putting out goals. Of course, 2050 is net zero, and we also have shorter term goals in 2025 as to what proportion of the balance sheet is going to be renewable, and that means having to make choices, and clearly that's a key metric by which we measure what we do, and how we take that forward.
Do you think will come a point when you are not going to work with the companies which are not scoring at a certain level in ESG?
Well, I think I've referred to this concept of making a difference with clients, and we talked about which are the sectors where, and it's not all the sectors where we make the difference, and I'm talking about on the wholesale banking side, on the corporate side. And if indeed being a sustainability pioneer is a key strategic metric, and we work with clients and help them do a transition pathway, and indeed if there is a divergence in the strategy, so it more than not working with the client, it is in probably that endeavor we would not be then making a difference in the client. So hence it would then tantamount to not really growing that relationship, and I can see that clearly on the pathway as we start to move from sustainable volume mobilized. But if there is a divergence in that strategy, and for us it's a key strategic imperative, then that's what it would lead to.
And for the ones who are in a certain benchmark, are you going to have, for example, incentives in lending money and all those things? Or because definitely with those who are not in your levels, probably you're going to be more strict.
And I think that's part of the whole sustainability linked KPIs, right? When we talk about the bonds and what is then that incentive on renewable financing, and that has to then translate to of course, there is a larger sustainable goal, a sustainability goal, but there's also the commercial and economic benefit. And we're starting to see companies having a sustainability framework, having science-based KPIs, and that then translates to, for example, in certain loans on achievement of KPIs, a certain 20 basis point, 10 basis points actually benefit, which is falling through, and that's what the whole KPI framework is, and that's already happening in terms of green loans and green bonds today, and for us, I mentioned the fact that we over close to 100 billion in terms of volumes mobilized, just in terms of sustainable volumes, and that will only continue to grow. So yes, so the short answer is yes. It starts to translate to economic and commercial benefits.
Mona, is that your question?
Yes, I have a unique opportunity to be the voice of customers or the voice of farmer. Sir, if I will be a farmer and I submit an application for a loan, except the financials, what kind of arguments can I use in order to convince ING Bank to receive a loan? Qualitative.
I would take that one. By the way, we have a good sector-oriented team that can appreciate more than the financials. So this is good. So first, you have to have a banker that knows the sector, because especially in farming, or if you're talking producers, farming, you need to know the sector. There's a lot that doesn't meet the eye in the financials that you need to know. But I would say that one thing that we are looking at, and especially in this context now, which is of course difficult, it's a war situation, whatever, so things that are not as usual, business as usual, is risk management. How the producers or the traders or whomever is involved in the value chain is managing their risks. Because right now, for example, sitting on stocks, sitting on inventory is a different game than it was 2 years ago, right? The volatility in the prices, the way the price goes up or down and then stays down is a bit less predictable, much less predictability in the past. So especially producers, for instance, who time the market in a way and basically time the market when they sell their stocks. This is basically the main driver aside from the input costs. Yes, we are on the same page. Well, having a bit more disciplined, clearly stated and educated approach about how you manage your risk and how long you finance your stocks and what is the carry cost and so on, I think that will be ever more important. So if I am to say something that I think is of use to farmers right now, is this, and I'm thinking like this, I'm from a village somewhere, even now I feel bad when I see too much sun in the sky because it means it doesn't rain, and for me that's bad news. So even now I cannot enjoy sun that much because of that, it leaves traces. But looking at that, thinking, okay, what can a banker say now useful to a farmer is this will be ever more important. It's already a make or break, if you ask me. And we are looking at that. So we are looking at that. If you convince, aside from the financials, and honestly, I'm a big supporter of the sector. I just supported a new line.
You want to be a farmer?
2 days ago, I fought hard in the group, and we got the approval. They knows what I'm talking about. Fought hard in the group to actually do this and finance more, and we pulled it off.
And the group reject your idea.
We pulled it off. We pulled it off. But the main driver is this: if you can convince anybody who's funding you that you are managing your risks wisely, because your financials right now say something, but it can all change in 3 or 4 months dramatically if you don't manage your stock policy or your sales policy right. So again, this is not business as usual. This was not valid 1 year ago even. So now this is a different world. God knows when it will change, if it will change, yes. So yes, this is what I'll be saying. Financials, okay. But we are forward-looking, we are not backward-looking, is your risk management policy. I know it sounds kind of fancy for many companies, but you have to have one.
Well,
and by the way,
you need to be a banker to understand what means risk policy, risk management.
We can assist. We can assist. The good news is we have people that know a lot. We are not getting used much. And by the way, an advantage, and I end with this, an advantage of a bank like ING, because everybody's banking. You have lending capabilities, products, and this is not unique to ING. There are many banks that can do this. What is probably useful, and I would always be looking as a client or a prospect, I would always be using, okay, what can the bank do for me in the end? Yeah, what can you do for me, and maybe differently or more? And what we can do is this kind of thing, network and sector knowledge. We are organized fully on a sector basis across the countries seamlessly, and when we are talking about agriculture in Romania, we are talking agriculture with people from Geneva that do agriculture worldwide, from France, from Netherlands, and from the UK and so on in the same meeting. So when we are discussing a file in Romania, I'm discussing it in a global
But
meeting,
what
in a
do
global
you
meeting.
need- Why do you need so many people?
No, it's not many people. It's just a few people that know these things, and they know in 5 minutes whether it makes sense or not. This is much more efficient cost-wise. By the way, they know what's happening everywhere, and you can also tap into that knowledge. We are using that to manage our risk. But you can tap into that knowledge for your own purposes. You can ask us what's going on, what's better to do or not, based on thousands of files that we see in the region, in the places where you sell.
Do you have
and
the
also-
God in your meeting? Because all the people said, look, God, when the rain will come.
You have a saying in Romania, Dumnezeu îți dă, dar nu spune în traistă. So God gives you but doesn't put it in the bag. So basically you have to help yourself a bit. Yeah, it's a
Uite,
partnership there.
Short commentary and go to your notes and Cornel. No, okay. Your notes.
As a European bank, and more specific as a East European bank, how do you see the Romanian business advantages to go abroad, to go regional? Because I think we have some exceptions here like EMAG, which is in 3 countries, if I'm right. But we still have quite a few success businesses going abroad and being local.
Yeah, I would answer that at 2 levels, and on one, clearly, if we see our business in Romania on what is the consumer side or the private individual side, clearly, it's we've been here for over 3 decades. It's organically grown. It's one of our fastest growing businesses across the board, and that's the opportunity just within. On being able to provide the services in Romania. But when we look at corporates, I think there we're present in almost 40 countries across the globe. And there, apart from the fact that we're focused on certain sectors, and of course we're looking at sustainability, it's really leveraging the network for our clients is key. So we have clients who deal with us across 20 countries, and there, I think Romania is core and central to Eastern Europe. We have so many of our clients, Dutch clients and French clients and German clients, all of whom bank with us in their home markets, and then we have the opportunity to serve them across the network. So on one hand, we look at just the business, locally in the market, but also from a client side, if you take a client view of a company view of the business, you really got to look at across markets, and so whether it is providing financing facilities or looking at transaction services across the geography, or looking at financial markets, or helping in corporate finance. That really transcends not just what the business is in the country, but across the different countries. There are, and of course in Europe, and for Europe, that's a core part of our network. So that's where I think Romania for us is absolutely critical, because it's not just what we do locally in Romania, but also all the international companies that work with us across international borders and who have business in Romania, and that's the leverage that we have. Apart from what we do, of course, locally in terms of consumers and retail. Florian is dying to say something.
Definitely, and just in continuing what Uday just said. We have examples. We call it outbound business. If it's Romanian companies, yes, going abroad, right?
I didn't want to use those terms, but
yeah, but it's outbound. In the internal, slang is outbound, like going out of the country. We have 80% of what's happening in Romania and in our portfolio, to be precise, is actually multinationals. We privatized with a vengeance in the early 2000s because the country was not going anywhere, being stuck, let's say, a bit. And then multinationals moved in, we privatized, okay, it was a decision. And then the economy is driven to a large extent by multinational companies, which brought a lot of skills, brought a lot of know-how and best practices, let's face it. But now, fortunately, I'm glad to see that we have capital accumulation on the local side. After 30 years of hard-earned entrepreneurship,
So
we have capital.
all of you are millionaire, yeah?
This is not how it works. An entrepreneur always invests their money in the business. So this is not the cash-rich people, it's the people that keep the money rolling in the business. It's always like this, and I respect that. But the problem is, the issue is, we are not very outgoing. No, are not very outgoing as a nation. We are very inward focused. Yeah, we are still looking at our own little courtyard. We are still village dwellers. We never left the village. It's still staying in your immediate neighborhood. You know, in the past, up to a generation ago or 2 generations ago, we were never leaving the village. We are still stuck in that mentality, and we are not as outgoing. Poland is a bit more outgoing. Czech Republic is a bit more outgoing, and I think these are the 2 cases, to be precise, in the region. Romania is now learning the skill of going out and and I think EMAG is a good example. We have RDS, which is DG, which is another good example of internationalization. By the way, we have clients that are Romanian clients, and we support in the network in on average 4 countries in Europe. And we are doing for them local operations, global operations. We are doing bond issuance for them, advisory about their mergers and acquisitions because they go there or they grow organically or they buy another company. We are advising them on that. We advise them on how to structure their finance in other countries. We are dispersing loans for their expansion, either from Romania to invest in that country or directly from that country to invest there. So we are doing this as we speak, and I gave concrete, for all I said, we did it this year.
Give me an example.
I cannot comment on particular. Off the record, after this meeting, I will give you the names. But we cannot. If clients wants to share the stories, we will share the stories. But it's concrete examples from this year.
Yeah, my question is. Now, most of the questions related to ESG were already asked, so. Now I would like to ask a very specific question. Would you consider to finance the ESG development of a customer, to give a loan to help him on the process to improve the ESG, like a product?
Yes.
And do you want to give us such a loan?
No, I think without getting into the specifics of a transaction, but the short answer is yes. I mean, if we have to, we've put it out there, you know, starting from really translating a net zero goal to a 2030 goal to a 2025 goal to a sector-wise goal, and these are you know, certain statements that we put out there, and that is clearly a key focus metric for us, because in the larger scheme, that's the strategic direction. We believe we can make a difference, and that's what I refer to, you know, just the sustainable finance volumes of working with our corporates, and that number is going to be, you know, over 100 billion euros for 2023, and each one of them, either on the loan side or on a bond side, is linked to a sustainability metric, and really working with clients. So when we talk about building transition pathways with clients, it's really helping them transition, and part of that is definitely capex, and part of that is investments in that direction.
So Corneliu can go to you and
ask
for the
after this we're going to have a chat.
Sure. Yeah, the
CFO is
CFO.
We should definitely talk. By the way,
we
this year, exactly for these purposes, we already disbursed 225 million euros in Romania, and we intermediated the bond for 175 million euro. We had bond, not our money, but intermediated, precisely to improve on specific ESG metrics. This is it. And by the way, it helps us internally greatly to make the pitch. I have a much easier time pitching to the organization such a loan than anything else.
So
the organization is really putting their money where their mouth is. So it's not just kind of, you know, stating it publicly. Internally they support it much more. It makes my life easier as well as a salesman.
And the bonus will come. Your bonus.
No, sir, we work for passion.
For passion. So we'll go to Nanan. Your question to all of them. Put a question. Be a journalist for
Journalist.
journalist for 5 minutes.
No, I think it'll be good to get feedback on from a bank perspective, and from our perspective, because I talked about making a difference and about focusing on sectors. What is it that we can do better? Specifically, some of them are her clients already, and some
To
of
be
them
a charitable organization.
Yes.
So this is the question, yeah?
I have one good news for ING Bank. As a distributor, we have a digital product, Risa is the name, that can help you to see in real time the evolution of the crop of farmer who receive loan. So I kindly invite you to have a conversation in this respect, because definitely could be addressed from risk management perspective, definitely.
Sure. This is value.
Yeah, who wants to answer?
So I'm not very much involved into this. My colleague here, Claudio, is doing that. But as far as I saw, we are increasing more and more. We have more companies in a group of companies. We increase more and more, our activity with ING, and this is probably because they are more flexible. And just by, I don't know, a few weeks ago, we had a very tough discussion with a different bank that we moved part of our business from there to ING, and they were very unhappy about it. So I honestly believe that this is showing that ING is going into the right direction.
Thank you.
Albert.
Before.
No, I didn't speak with
You spoke before, huh?
It was a marketing. Cornel was an influencer paid by ING.
Definitely, yeah.
Who wants to answer?
So I think what we can do better, it's our purpose is to do better products to add value to the consumer. So this is what we do. So of course, if this means that the product needs to be better, and then we need to implement this ESG transition, then we have to do it, because in the end of the day, the value that we are bringing to the consumer is not just in the intrinsic value of the product, but it's how we do as a business in the society. So we have to have better products, better packaging, less carbon footprint, all those things that we need to reduce. Definitely, it's a journey. We need to, engage into that. I understood that from 2025, ESG reporting would be officially obligatory, for the big companies. So this is coming. Definitely, if we are not on the right path, we are going to lag behind. So we need to be there. So that would be part of our journey as well.
Marius, do you want? No? Tudor? No?
Thank you.
Andrei?
So I would just say, because there is the CEO strategy during difficult times, and when Florian was talking about risk management, and so that's something which, let's say, last 2 years we really spent doing risk management all the time. And I can really subscribe to it, having guys in the meetings which are looking over more markets, which are looking at over several sectors, because we had those discussions with our shareholder, which is spread across various sectors, spread across various markets, across all Europe and globally. It's bringing huge value. Because if you do the risk management and you are looking at it and you are just locked in your daily problem, you might either not see the risk, or you might see so many risks. But if you have guys which are looking at more sectors, which are looking at more markets, you can much easier really identify what are the relevant risks, what are the risks you should really address, what is just the noise. And I think this is something which risk management is not the strong part of Romanian business environment. People like to be optimistic, and they would like to see the good side. And I think really bringing to business and helping with the risk management with this global view, I think that's something which can really help to business environment to be more resilient in difficult times.
I think you cannot be a good entrepreneur if you look at the risk management. To be entrepreneur is to put risk in. Yeah, to take risks.
It's a question of what risks you keep and what risks you hedge. And it's a fine decision to know what risks you want to keep because you know how to manage, and it's the essence of your business, and what risks are actually a nuisance or something that's not the core of your business that you should actually manage away from your business. And we can help in even identifying that and see how is the best way to do it. But I think our most value added, and by the way, readily available and no extra cost, as speaking of our costs, is tap into our amazing sector knowledge and network knowledge. Very few people actually make use of it. I have to beg to convince people to make use of it because usually people are busy. We are busy going about our own business. But you know, sometimes you could save lots of money or save lots of headaches or mistakes if you tap into, as Andre was saying, tap into this. This is something that we are bringing to this market that maybe some other people cannot bring simply by the nature of the organization. Again, it is used only by very few companies and only rarely, yeah. But there are a few that are doing it on a structural basis, but I would count them on the fingers of my hand. I think this is a terrible loss that we are not making full use of this. Full stop. Again, it's free of charge. It's in the price. We would never be charging for it. I think it's good for the relationship, yeah. It shows the value added. I'm not kidding. We have people in the room that can help with this, and anybody in this room. Looking at my colleagues, 2 of them are here. They can call at any time anybody worldwide about your sector, about the countries. This is free of charge. And see what is happening, value to you in countries that present interest to you or in the sectors that are of interest to you.
I met the first banker free of charge.
Give us a try. Give us a try. And again, this is I think the value of being a client here.
Yeah.
So yeah.
Uday, the last commentary, and then we'll close and go to the dinner.
No, I think you know, clearly I don't want to make this an ING bank you know, discussion, but I think overall at a time like this, we've seen how the macro is, and you know, the key takeaways, just to reiterate, looking at the growth dynamics, we've seen what that looks like from an inflation perspective. It seems to be coming off, and sure, there are some headwinds looking at, you know, part of some large economies in the region. But it is at a time like this where I think in each of our businesses, how we make a difference with our clients is what kind of differentiates us. And the discussion on sustainability also kind of drives that. We've identified that as a key way where we can make a difference with clients. So I think a part of managing strategy in difficult times is ensuring how you make a difference with clients, and that is something which is truly relevant for each of the businesses.
So your future will be on the beach.
My future, personal future. At
This
some point,
was the last.
Yeah, but you know, I just want to take this opportunity to just thank you and everyone for being here, and thank you for having me and having our team from ING, and you know, it's been an absolutely engaging discussion with some of our colleagues, and of course we have some of our clients in the room, and for those who are not, hopefully we'll catch up after this.
Ok, let's applaud him. Haideți să aplaudăm pe toți și mulțumesc frumos pentru această discuție. Cina este la restaurantul Veranda, cu toții sunteți bineveniți acolo. Puteți să mai petreceți câteva ore aici și să ne auzim cu bine și să avem creștere economică la anul.